Okay, so part 2 of the video, as I've promised, I'll be doing the calculation and I'll be showing you all the calculation for the depreciation, for the disposed account, for the remaining fixtures, as well as for the new purchased fixtures. So again, we have to be very clear. The financial year ends on this date. Okay, 31st December 2020. Now, the depreciation, if you look, I've highlighted in purple. The depreciation they're using is the straight line basis, which is here in yellow. Okay, and she assumes fixtures will be having a useful life of 4 years, at which the residual value will be 10% of the original cost. Okay, again, guys, please remember, do not use your 10% as your depreciation rate. Okay, because the moment you all see the percentage, some may not read the question fully and they will just take the 10% and they will times with whatever the cost it is. Okay, it is wrong, because I have taught you all previously that straight line method has two ways where you calculate your depreciation. So this is the second way, that is depreciation for this question. The straight line method for this question is actually pertaining to the cost, residual value and useful life, because that's what the question has given. So now this is the formula, the cost, okay, the cost minus the residual value over its useful life. And useful life has been already given in the question, it is 4 years. So if you're asking where I got it from, it's from the question here, the one that I've highlighted. Okay, next, the residual value is 10% of your original cost of the asset. That's it. So this one we have to do our own calculation. Now, without further wasting time, let's go into the question. Now, for the disposed account, let's calculate for the first one. This is the disposed, this is for the remaining, and I'll teach you how to calculate for the new asset. So for the disposed account, if you see, the disposed account, you bought it on 1st January 2018. Okay, so 31st December 2018, this is your year 1. Next, 1st January 2019 to the year 2. And last but not least will be 1st January 2022. Remember, you dispose it off on June 30th. So 2020, this is your year 3. So if you see year 1, you use it for 1 year. Year 2, you use it for 1 year. But year 3, you use it for 6 months. Also remember that this is the one that you will have to actually include in your provision account later. Okay, so let's do the calculation first. First of all, the cost of the vehicle, the cost of the fixtures is 20,000. So let's do 20,000 minus 2,000. Okay, how do I get 2,000? You already know, I've already stated the residual value is 10% of the cost. The cost is 20,000. So 20,000 times 10% is the 2,000 that I got here, and over 4. Therefore, the answer here that you get will be 18,000 divided by 4. You'll be getting 4,500. Okay, so this is your depreciation for your year 1. Okay, 4,005. Year 2 is also 4,005. Okay, year 3, since you used it only for 6 months, which is half the year, therefore 4,500 divided by 2, you get 2,250. Now please bear in mind that this will also be taken up into your income statement for the year. Okay, charge for the year. Okay, so anyhow, your total depreciation will be for the disposed vehicle will be sorry, the total accumulated, the total accumulated depreciation will be, just add all the 2.5 years, 4,005 plus 4,005 plus 2,250, you will get 1,1,250. Okay, so this is your total accumulated for your disposed account. So let's go into number 2, the remaining assets. Okay, so for the remaining assets, if you see, now the cost, okay, if you go up and see further, the cost was 115,000. Okay, so the cost of the remaining asset. So it's very simple. It's 115,000. Remember, you need to minus the amount that you disposed. So the asset that you disposed was 20K. So your new cost will be 9,500. sorry, 95,000. 95,000 is the remaining cost of the asset. Okay, so now how do you calculate the depreciation for this? It's again very simple, using the same straight line. You minus your 9,000. I've already told you it is the residual value, which you have to come back to this. It is 10% of your cost. Okay, so what is the depreciation for the remaining asset? 95,000 minus 9,005, you get 85,500. Divided by 4, you will get 21375. So this will be your answer, 21375. Now let's go further for number 3. So I'm going to highlight all this in blue. Yeah, all those that will be going to the depreciation later will be this, and the other one I will come to you once I'm done. So this is for the new asset. So the new asset also you have to calculate your depreciation. So how are you going to do it? It's very easy. The new asset cost is 30,000. You minus the residual value, which will be 3,000, and you divide it by 4 years. Hence the depreciation calculation, the amount will be around 6,750. So this is the other one that goes to the income statement. This is the other figure. Okay, so these are the 3 figures that will be going to the income statement. Okay, thank you. We'll meet in part 3 for the entry into the respective ledgers.